Hello viewers, welcome to my channel. I'm Hashim Ali Khan. Now I'm going to start the problems on computation of income from salary. In the last so many videos I've explained you the provisions regarding computation of income from salary. Income Tax Act has given elaborate provisions regarding how to compute the income from salary. So I have explained you in detail regarding the four elements of income from salary, that is what is salary, what are the items that will come under salary, what are allowances, what are the different types of allowances, what are the provision of taxability of allowances, then perquisites, how to calculate the value of the perquisites. I have explained you in detail, profit in lieu of salary and deductions from salary. So the problems which I am going to explain you now depends on those provisions. So if you are regularly watching those provisions, then definitely you don't find any difficulty in understanding the problem. Otherwise, if you have joined right now without listening, without watching the provisions of income from salary, it will be difficult for you to understand. So every problem will be a panic for you. So to overcome that, I suggest you to watch the earlier videos, get a command on the provisions. Then only you can easily understand the problems, right? So if you have not watched the earlier videos, I suggest you to go to the playlist of my channel, select the subject Income Tax 1 for the assessment year 2021. Watch the earlier videos, then come to this video regarding the problems of income from salary. So before starting the problem, I expect my viewers to have a printout of the problems, which I have given in the link under my description. So take a printout, keep it ready before start watching this video. Now, first problem I'm reading out. Mr. Suresh is working in railways and stays at Kurnool, Andhra Pradesh state. He submitted the following particulars of his income for the previous year 2019-20. Compute income from salary for the assessment year 2021. Basic pay 32,800 per month. Entertainment allowance 4,000 per month. House rent allowance 4,000 per month. Rent paid by him 6,000 per month. CCA, city compensatory allowance 1,000 per month. He paid rupees 200 per month as professional tax. Employer's contribution to SPF, statutory provident fund, is 13% of salary, and interest credited in SPF at 10% rate is 38,400. During the previous year, he availed free travel passes for himself and wife and 2 children, valued 33,400. This is the problem. Now, first of all, I'll explain you one by one each item. We have to find out the income from salary of Mr. Suresh, who is working in Indian Railways. So he's a government employee and staying at Kurnool. It falls in other states, other area, other town. Then we are given basic pay. Basic pay directly will take 32,800. Entertainment allowance 4,000 per month. First of all, entertainment allowance should be taken under allowances. Under allowances, whatever year received fully will take. Later on, deduction will be given under section 16.2. Under section 16.2, year deduction will be given. So that in working notes, we have to find out how much deduction he will get for EA. Next is HRA, house rent allowance. Exemption is allowed for HRA if the SSC is paying the rent. So here it is given rent paid by him. So SSC is paying the rent and stays at Kurnool, other town. So HRA will be exempted under section 10 subsection 13A to the list of the following 3 amounts that we have to show you in working notes. Next is CCA, city compensatory allowance, fully taxable, no exemption, nothing. Then he paid 200 per month as professional tax. Professional tax paid will be allowed as a deduction under section 16.3. Then employer's contribution to SPF, statutory provident fund. The previous theory video I have explained you in detail regarding provident funds. The employer's contribution to SPF is fully exempted from tax, and interest credited in SPF is also exempted from tax. Last one, during the previous year he held travel passes. So when travel passes are given for the employee or their family members by Indian Railways or airlines, it is fully exempted from tax. So here he is working in Indian Railways. So the travel passes which he availed for himself and wife and children, it is fully exempted from tax. So I have explained you the provisions regarding all the items given in the problem. Now see the solution of this problem. Computation of income from salary of Mr. Suresh for the assessment year 2020-21. Right? First, salary. Under salary, we have only basic in our problem. We don't have bonus, fees, commission or employer's contribution to RPF. We don't have RPF. So all other items we don't have, only basic. 32,800 into 12, 3,93,600, only one item. So next item is allowances. Under allowances we take EA, entertainment allowance 4,000 per month given in the problem. Directly 4,000 into 12, 48,000. First of all, whatever EA is received, fully you should take it on allowances. Next, HRA, house rent allowance, working note. In working note, we have to find out how much is the unexempted HRA. How much is unexempted or taxable. So here, I have given the complete explanation. HRA exemption under section 10, subsection 13A. The HRA exemption will be allowed only when the SSC is paying the rent. So in the problem it is given, he is paying the rent, 6,000 rupees per month. So the SSC is paying the rent and stays at Kurnool. Kurnool means other town. For getting HRA exemption, we have divided the country into two categories. The first category, 4 metropolitan cities, and second category, other towns. So the 4 metropolitan cities are Mumbai, Delhi, Chennai and Kolkata. These 4 are metro. Apart from that, the rest of India are other towns. So here Kurnool, other town. So HRA is exempted to the list of the following 3 amounts. First, actual HRA receipt. It is given in the problem 4,000 rupees per month. So 4,000 into 12, 48,000. Second is rent paid minus 10% of salary. Remember, all these things I have explained in the previous video regarding allowances. So if you have watched those videos, then definitely it won't be new to you. Otherwise, every point you will be confused. How we got this, all these are the provisions which I have explained. So my suggestion, watch the earlier videos, then only you come to this video. Now, rent paid minus 10% of salary. Rent paid is given in the problem 6,000 per month. So 6,000 into 12, 72,000 minus 10% of salary. What do you mean by salary? Here for the purpose of HRA exemption, salary means basic pay only. DA will be included if it enters for retirement benefit, and commission if it is based on fixed percentage on turnover. So we don't have DA here. We don't have commission here. So we don't have DA, we don't have commission. So we take only basic. How much is the basic salary? 3,93,600. So 10% of 3,93,600, 39,360. 72,000 minus 39,360, 32,640. Third one is 40% of salary. So 40% of 3,93,600, 1,57,440. In these three, whichever is least is exempted. The least is 32,640 is the least. Therefore, HRA exempted under section 10(13)(a) is 32,640. This is the exempted amount. But we want unexempted amount. We want taxable amount. The actual HRA receipt. How much is the actual HRA receipt? 48,000. From 48,000, deduct the exempted. Exempted is 32,640. So taxable 15,360. So 15,360 is the taxable HRA. Now take this 15,360 here. 15,360 here. Next CCA. CCA is fully taxable. No exemption, nothing. Always. Hamesha. So CCA 1,000 per month into 12. Over. We have completed basic. We have taken allowances. Now third. Perquisites. Perquisites. Under perquisites, free travel passes. Just now I told you free travel passes given to the employee or their family members by the Indian Railways. Fully exempted from tax. Dash. Profit in lieu of salary we don't have. Take the total gross salary, 4,68,960 is the gross salary. Now, deductions under section 16. 3 deductions are allowed. Standard deduction 16(1)(a). Entertainment allowance deduction, EA deduction under section 16(2). Profession tax under section 16(3). That's it. So first, Standard deduction under section 16(1)(a). Working note. I have explained you in working note. You can see here. Here. Standard deduction. The least of the following two amounts will be allowed as deduction. The least of the two are, first one, gross income from salary. We got the gross income from salary 4,68,960. 4,68,000. Or fixed ceiling. The ceiling has been given, maximum ceiling is given as 50,000 by Income Tax Act. This 50,000 is fixed by Income Tax Act. So least of these two is 50,000. So standard deduction under section 16(1)(a), 50,000. Now EA deduction under section 16(2). First of all, EA should be fully taken under allowances. Later on, we have to see whether he is eligible for deduction or not. So what is the eligibility condition? Only government employees will get EA deduction. Non-government employees will not get the deduction. So we have decided, first line itself it is given, he is working in Indian Railways, government employee. So EA deduction will be allowed. So EA deduction, the SSC is a government employee, so EA deduction under section 16(2) is allowed to the least of the following three amounts. First one, 20% of salary. Again I am telling, all these provisions I have explained in the earlier videos. So watch those videos to get a command on all these provisions. Now 20% of salary. For EA deduction, salary means only basic, nothing. No HR, no DA, no commission. The meaning of salary will be different in different circumstances. While calculating HRA, salary means basic pay. DA will be included if it enters for retirement benefit, plus commission if it is based on fixed percentage on turnover. Whereas in case of EA, salary means only basic, nothing else. So how much is the basic? 393,600. So 20% of 393,600, 78,720. Or actual year received. Second point, actual year. How much is the actual year? 48,000. Third one, fixed. A ceiling has been given. Maximum ceiling is given by the Income Tax Act. That ceiling is 5,000. The least of these three is allowed as deduction. Least is 5,000. So EA deduction under section 16(2), 5,000. Now last one, profession tax. It is given in the problem the SSC has paid profession tax 200 rupees per month. So 200 into 12, 2,400. Take the total, 57,400. The deductions are 57,400. So deduct it, 4,11,560. 4,11,560 is the income from salary. In working note, you have to give the complete explanation. HRA exemption, EA deduction, then standard deduction, employer's contribution to SPF. Just now I told you there are four types of provident fund. That is, first SPF, statutory provident fund, RPF, recognized provident fund, URPF, unrecognized provident fund, PPF, public provident fund. The detail I have explained in the previous video. So right now, the contribution, employer's contribution to SPF, fully exempted from tax. Interest credited in SPF, fully exempted from tax. Keep this in mind. Second, free travel passes issued by Indian Railways to the employees or the family members is tax-free perquisite. That's it. So this is the end of problem number 1. Come on, now we'll start the next second problem. Problem number 2. See carefully. Srimati Malini is working in a company since 1/10/1998. So when she is working in a company, it means she is a non-government employee. First point to remember. Her income particulars for the year ending 31st March 2020 are as under. Basic pay 25,000 per month. Then basic pay directly will take. See here. Computation of income from salary of Srimati Malini for the assessment year. First basic pay 25,000 per month into 12, 3 lakh. Directly will take. Then education allowance. Regarding education allowance, there is a provision. When employer gives education allowance for the children, then deduction will be allowed. Deduction will be allowed when education allowance is given for the children. But in this problem, it is not specified whether education allowance is given for the children or for the employee. Nothing is given, no information, no details are given. So we have to make the assumption. The assumption is this education allowance is given to the employee, not for the children. Now, when education allowance is given to the employee, then we have to see unspent amount is taxable. How much amount is spent is not taxable. How much amount is unspent is taxable. Here nothing is given regarding how much amount spent. How much amount spent is not given. So we will make the assumption that nothing he has spent. He has spent nothing. So the whole education allowance is taxable on our assumption. On our assumption, because the problem is silent. So in working note you have to write down education allowance. So see here, education allowance. The detail of education allowance is not given, so we assume that it is not given for children. First assumption, it is not given for children. It is given as fixed allowance to the employee. Unspent amount is taxable. The provision of Income Tax Act is unspent amount is taxable. Since spent amount is not given, so it is fully taxable. So Income Tax Act says when unspent amount is not given, so we assume that the employee has not spent. That means the whole education allowance is fully taxable. So you have taken education allowance 3,000 per month into 12, 36,000. Next is entertainment allowance. For EA, entertainment allowance, first of all, it should be taken fully under the head allowances. Under the head allowances, entertainment allowance 6,000 per month into 12, 72,000. Later on, we have to see whether he is eligible for deduction under section 16(2). EA deduction will be allowed under section 16(2). But EA deduction will be allowed only if he is a government employee. For non-government employee, EA deduction will not be allowed. So first of all, we should take fully here. Later on, we have to see whether he is eligible or not. Next is DA 9,500. So dearness allowance 9,500 into 12, 1,14,000. Conveyance allowance 10,000 per annum. 85% is spent for official purpose. So the income tax provision says conveyance allowance unspent amount is taxable. Spent amount is not taxable. Conveyance allowance on official duties he has spent 85%. That means 10,000 rupees he got in 1 year. Out of 10,000, 85% is spent on official duties. So it is not taxable. Unspent amount is 15%. So 15% of 10,000, 1,500. 15% of 10,000, 1,500 is taxable. Next one is bonus. Bonus is fully taxable under the head salary. So under the head salary, you should take bonus 30,000. Now next one, free refreshment provided. When refreshments are provided, it is a perquisite. So under perquisite, we should take free refreshment provided in working note. In the previous theory video, I have explained you in detail regarding all perquisite. So one of the perquisite is when the employer provides refreshments, tea, coffee or cool drinks, snacks within the business premises and during office hours. Within the business premises and during office hours, it's a tax-free perquisite. So here specifically given free refreshment provided during office hours in the office premises, valued at rupees 6,000. It is completely exempted, tax-free. So here free refreshment provided in working note. In working note somewhere I have specified here. Free refreshment provided to the employees during business hours and within business premises is a tax-free perquisite. In examination, you should write on all these working notes. The examiner will not accept directly only solution. These notes are forming the part of this computation. So in working note, you should specify that refreshment provided by the employer to the employee during business hours and within business premises is a tax-free perquisite dash. Next one is employer's contribution to approved superannuation fund. See, Income Tax Act has given the provision that employer's contribution to approved superannuation fund will be exempted up to rupees 1,50,000. Ceiling is given by the Income Tax Act. Over 1,50,000 taxable. Here it is given 1,70,000. So 20,000 rupees more, that 20,000 is taxable under that salary. Under that salary. So employer's contribution to superannuation fund 20,000. In working note you have to write down here. Employer's contribution to approved superannuation fund is exempted up to rupees 1,50,000. The excess amount rupees 20,000 is taxable under that salary. Clearly I have given in the working note. Next one is the company gave interest-free loan of rupees 15,000 as festival loan to be deducted in 12 monthly installments, SBI rate 12.05%. Employee got interest-free loan from the employer, it's a taxable perquisite. But one provision is given by the Income Tax Act. If the loan amount is up to 20,000, it is called petty loan. Up to 20, aggregate of all loans. Aggregate of all loans up to the amount of 20,000 are called petty loans. And the interest-free petty loan is a tax-free perquisite. Interest on petty loan is a tax-free perquisite. So here employee has taken 15,000 rupees loan. It's a petty loan. It is a petty loan. So we are not concerned with SBI rate of interest. It's a tax-free perquisite. So here interest-free loan, working note number 2. Here I have specified. The amount of interest-free loan is below 20,000. So it is a petty loan. It is a tax-free perquisite. In note you have to write down. Next. After that, the company sold office table costing rupees 15,000 for rupees 5,000, which is purchased 2 years ago. One perquisite is movable asset transferred by the employer to the employee is a taxable perquisite. Movable asset transferred by the employer to the employee is a taxable perquisite. Here office table. Office table is a movable asset. So movable asset, the cost of that office table was 15,000 rupees 2 years back. The company has purchased the office table for 15,000 2 years back. After using for 2 years, then the company has sold, transferred this table to the employee at an amount of rupees 5,000. Now we have to find out what is the value of the perquisite. The Income Tax Act has given the provision. In the previous videos, I have explained you in detail under perquisite. Under perquisite, I have explained this point. Movable asset transferred by the employer to the employee. So how to calculate the value of the perquisite? Take the book value after deducting depreciation at 10% per annum on straight line method. Deduct normal depreciation from the cost of the asset. Deduct normal depreciation at 10% per annum on straight line method. Then we'll get the book value. Compare the book value with the sale price. So book value minus sale price will get the value of perquisite. So here in working note I have explained you here. Transfer of movable asset. The cost of office table 15,000. The company, the employer has purchased for 15,000. Depreciation at the rate of 10% on SLM. Straight line method for 2 years, because it is given the problem 2 years ago it was purchased. Straight line method. So 10% of 15,000 is 1,500. So 1 year 1,500. So 2 years 1,500 plus 1,500 3,000. Normal depreciation 3,000. So 15,000 cost of the table minus 3,000 normal depreciation, 12,000 rupees is the book value of the asset. And that 12,000 rupees worth of office table was sold for rupees 5,000. Therefore, the perquisite value is 7,000. 12,000 minus 5,000, 7,000. So I have taken here transfer of movable assets 7,000. Now telephone bill of the residence. Here it is given. During the year, the company paid telephone bill of the residence rupees 78,000. The previous theory videos I have explained you what is the tax-free perquisite. Under the tax-free perquisite, I have explained you telephone bill of the residence of the employee paid by the employer is a tax-free perquisite. That point you have to remember. That's why I am telling you again and again. The whole problems depend on the theory which I have explained. That is the foundation. Without watching, without listening the theory videos, don't come to the problems. All these I have explained. So telephone, here I have written telephone bill of the residence of the employee paid by the employer is a tax-free perquisite. Put a dash. Then and reimbursed 65,000 rupees medical expenses spent in a recognized hospital in India. Again, one of the tax-free perquisite. One of the tax-free perquisite. A reimbursement of medical expenses incurred by the employee in a recognized hospital. The employee or family members suffer from some disease. They have spent the amount in a recognized hospital and the amount is reimbursed by the employer to the employee. It's a tax-free perquisite. If it is an unrecognized hospital, then reimbursement amount is fully taxable. Unrecognized hospital, fully taxable. Recognized hospital, tax-free. So here I have reimbursement of medical expense incurred in a recognized hospital is a tax-free perquisite. Put a dash. Tax-free perquisite. Over all the perquisites I have taken. Free refreshments provided, dash. Interest-free loan, dash. Transfer of mobile assets, 7,000. Telephone bill of residence, dash. Reimbursement of medical expense, dash. But don't write simply a dash. You have to write in working note the provision. Then profit in lieu of salary normally will not be there. It's not there. If it is there in the coming problem, we'll take it. Now take the total gross income from salary, 5,80,500. 5,80,500 is the gross income from salary from this deductions under section 16. 3 deductions. First, standard deduction under section 16 1A. So here in working note I have explained. Standard deduction under section 16(1) is allowed to the list of the following 2 amounts. First, gross income from salary. How much is the gross income from salary? 5,80,500. So 5,80,500. Second, fixed. The ceiling has been given 50,000 by the Income Tax Act. Minimum, least of those 2, 50,000. So 50,000 is the standard deduction. EA deduction. The assessee is a non-government employee, so EA deduction under section 16(2) is not allowed. That you should write in working note. Somewhere here I have written. Here, last working note. EA deduction under section 16(2). The assessee is a non-government employee, so EA deduction under section 16(2) is not allowed. Put a dash. Then profession tax. It is given in the last line. During the year, she paid 250 rupees per month as profession tax. So 250 per month into 12, 3,000. That's all. Compute the income from salary for the current assessment here. So 50 plus 3, 53,000 deduct 5,27,500. That is the income from salary. I have explained each and every point. If you watch with full concentration, remembering all the provisions, then definitely you can enjoy the lecture of income tax. It's not difficult. Simply, if you are genuinely interested with my lecture, if you want to gain the knowledge, gain the command on the subject, just follow my instructions. Follow my instruction. I'm explaining each and every point in detail. Okay. Hope you are satisfied with my lecture. If you are satisfied, like the video, give your feedback, comments on my videos. Share the channel in your group, in your friend circle, so that more students can watch the videos. And lastly, don't forget to subscribe my channel if you have not yet subscribed. So we'll continue the next problem in the next video.